Hey everybody, welcome to Trade Genius Podcast. Bob Kudla here. I got my good friend Phil. Jerome Powell is giving up. And what does that mean for your portfolio? We're going to tell you. Stay tuned.
Trade Genius.
Okay, Phil, nobody believes Jerome Powell anymore. Janet Yellen's walking him around with a leash on. He's done. And all the other Fed minions behind him are talking about, we think we're doing the right thing, we can pause, blah, 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 blah. But you have data to say that you guys might be, what's the word to say? The news of my death might be premature. And I want you to maybe throw people in on a little action here on the inflation side.
Right. So the problem that we're going to run into, I think, is that reinflation is going to reignite. And here's why. I mean, if you look, starting with the upper left corner there, that's your median CPI and that's your core sticky CPI. They're both turning back up again. And this is data from the Fed. And then in the upper right, you've got business price plans rising. This is related to wage costs. Those are cranking back up. Remember, the Fed's keying in on the job market softening, which should soften wage growth. But if wage growth doesn't soften, it's going to be a problem for inflation. Landlords demanding large rent increases again. That's in the lower left. That's a problem. Household inflation in the lower right corner, household inflation expectations up. And that's coming from the consumer sentiment surveys that we get every week or so. And so if the consumer sentiment is saying that they're expecting inflation to go up, that means they're probably already seeing or failing to see a decline in inflation, and pricing for things that matter to them are sticky. So I think, Bob, that regardless of what anybody's saying, what the headlines are saying, or what any of the Fed speakers are saying, inflation really isn't coming down to a point where it's affecting the consumer in a positive way. Otherwise, why would we have in that lower right corner with the Michigan Consumer Confidence reports, why is the expectation on inflation so high here, cranking back up?
Yeah, look, I totally agree. In the 1970s is our last analog here on inflation. We had a three-phase inflation. And what's really interesting about this time is, basically Volcker, he kind of ruled the roost, and Treasury went along with him. And this is like probably the first time in history where Treasury and the Fed are working at cross purposes to each other. Now, one could argue, and people are now starting to argue, is that maybe they're basically two sides of the same coin, just like the uniparty in charge in Washington, and we're just being treated to a show. But the fact of the matter is he raised interest rates up, which is really hurting the consumer, but Yellen is pumping in fiscal that's keeping inflation high, and looks like we may end up with the worst possible scenario here, where prices are increasingly out of reach of people at the worst possible time when we're going to start getting layoffs layered in here, but the price of the have-to-haves are not going to come down enough to give people relief.
Right.
And so, Phil, what I wanted to do was show people what I think is happening. The market sniffed this out probably 2 or 3 weeks ago, and I call this the Fed has given up scenario. And I want to throw some charts up there, if you will. I'll go through them all, then I'll have you comment back on it with me, Phil. And you
Sure.
can talk the Bitcoin one, which I'm going to do second. So first one is TLT. We told you guys for months, start scaling into TLT, start scaling into TLT. And every time it would do a little bit of a bottom there, people told us that we're stupid and we're messed up. And I said, just keep on stacking. And you see where the big red arrow is there? That's when our worm or the caterpillar or our trade force indicator on a long macro setting. And for those who are customers, that setting's 55, okay, across the board. So you can see longer macro trends. And TLT burst into a right shoulder and it came to a neckline. And I said, two things are going to happen. Either it's going to cup and handle or it's going to fail. And basically it completed the inverted fill and is shooting up now. And our target at that time, and we put this chart out to you guys about a month or so ago, that we said this is the scenario that we're looking at. Basically bought back that whole sell-off, and 95 is our target on that. So I'm going to throw the Bitcoin one up next, and maybe you could speak to the Bitcoin slide.
Yeah, so basically what we have here are just these continued pushes on the price of Bitcoin, and then we get a consolidation period and then another push up. So we've been cranking away in this kind of up channel that you can see there in the linear regression channel on the chart. But the higher setting on this, even on the hourly, is giving us some pretty decent swings. And so we're getting a little toppy here, obviously up here in the 38s, but yeah, it's been pretty good indicator. Now, in terms of Bitcoin, if we're sliding into a recession, which I think is what these charts are telling us, because, TLT starting to bid up, all we were missing would be equities to pull back. If we start to see that divergence, and I think we're starting to get this into that stage of the recession trade. So for Bitcoin, it's interesting because this would be its first rodeo in that regard. And we don't know, right? It has to show us what role is it going to play. It could certainly be gold because, it's been accepted as basically gold 2.0 in terms of being a store of value, right? And a more efficient store of value. It's more portable and, it just does things more efficiently in that regard. So if that's the case, then it will follow gold. And I think more importantly, it'll follow what gold did during gold's ETF era too. Now I'm talking a little more longer term here, but gold had a 10-year bull run once it entered its ETF era, meaning that once retail ETFs were introduced, then on the spot gold, then you saw an extended run and you got away from kind of the boom bust cycle. Because if you look at gold's chart, and this played out over much longer time frame because back then things moved slower, but gold's structure and its price and how it inflated and deflated looked a lot like what we saw in 2017, or and what we've seen in the last couple of cycles, really, where we have these boom busts. So if that's the case, then really what we should be looking for is Bitcoin to mimic the gold behavior, which means it's going to perform pretty well in a recession. Now it doesn't mean it's going to not be immune to drops. Even gold pulls back in recessions. It just doesn't pull back as much. Where the markets are making lower lows, the gold and Bitcoin may not make those lower lows on a weekly chart, right? They'll come down, but not as bad as the market. And so that's what we would be expecting if that's the case. And then out of this let's just say we go into a recession in 2024, we come out of that at some point in 25, then Bitcoin would probably be on an extended run where people are looking for it to peak out, Bob, in 2026, or that typical, 500 days after the halving type of thing. It doesn't happen. Some people might be caught where they sell out there and they get left behind because it just keeps on trucking for another 5, 6, 7 years. And I think that's the most interesting scenario here. But
hey guys, we got Black Friday specials. They're really cool. We have the best pricing for the year. You can get our basic package, our advanced packages, our VIP rooms, software, trade options, trade crypto, trade the futures. With us, get our indicators, best prices of the year. Take advantage of it. Thanks for listening.
Be that as it may, the point being is that with this TradeForce indicator, it's very clear it's picking up the momentum as things are picking back up and when it's rolling back over. And so it's a really good trading environment right now in terms of this, if you're just looking, because I think you do benefit from getting in and out of these moves right now, because I think things are getting, if you look at the weekly chart, things are getting a little overbought here in terms of that. And we do typically see historically a pullback before the halving. So, that's kind of the long and short of it on Bitcoin.
Yeah. And throw gold up. And that's a really good point, Phil. I think we're at the opening of the potato chip bag stage of the recession, where these taste really good until people recognize that there's a reason why bonds are going up and gold was going up, Bitcoin was going up, but oil's going down, is because then we're going to have basically a devolution in growth, and then everything's going to blow up. Like you said, gold will go down with that eventually. But here's the gold chart, and gold's very, very similar. I think the dating between gold and Bitcoin are going well at the moment. They both kind of recognize what the Fed was doing at the same time. And, we're now fully invested in our gold and silver positions. You can come trade with us if you want to know what we own and what we trade. And this move this week was pretty spectacular. And basically Powell today all but told us that there's going to be no raise in rates in December with the Fed. And so everybody kind of jumped it. And then the last chart I want to show you is the one where Phil's saying that the alarm bells are slowly going off here. And this is the oil chart. Okay, this is oil futures. And you can see here, it basically is creating a Eiffel Tower effect. And so, oil can move down, and I'm still pretty much overweight energy, not necessarily oil futures. So I have a lot of hedges and ability to ignore this move in oil. But oil, it looks kind of, unless if they take that low out, Phil, we're going to go down in the mid 60s on oil. We're going to Eiffel Tower this move, which typically happens on a blow up move like that. And we'll see that in SPY too. When this thing blows up, and it sure looks like they're going to try to keep this thing aloft until those flows dry up on the derivative side, is that we'll see a move similar to this with SPY, where it'll be a multi-month down move in the indexes. But, oil is the first canary in the coal mine. And look, OPEC is trying to cut production, Phil. It's not working. And, prices are continuing to fall. And it's going to be problematic because at some point they're going to want to produce, because they're not making money at these price levels. Now, the United States, ironically, and Russia, ironically, make money at this level. U.S. makes money up down to $50. So it's going to be really interesting to see. And by the way, we're number one producer in the world again, which is weird. And we're the number one exporter of liquefied natural gas, which is weird because, you expect with Biden that all this stuff would have been cut off at the knees. And then we're getting uranium is popping too. So I think a lot of people are getting defensive here. Oil keeps moving down. And then when SPY follows oil, then you're going to start seeing the whole thing roll over, but TLT will keep going up. So that's kind of what I want to show you guys. I want to show you the power of our indicators, and it's a really good system. Phil and I, you don't have to think so much. Well, the more important thing is it keeps you from not thinking. Okay, people like to FOMO these trades, and also if a trade moves on you, it tells you to sit on your hands. Like right now, if you want to start jumping into gold and this in a big way, well, we've already had 3 stair steps up. So you're going to have to wait for some sort of pullback now to get in. They're counting on you to be greedy here. And the same with Bitcoin. So that's why we have this indicator. Let it pull back like the oil chart here. See it pulled back for a couple weeks before it lifted into June. That's what you want to do. Let it pull back. And you buy that next up move instead of chasing the end of a big up move. And same with shorting it. Oil can actually bottom here. We don't know, but I wouldn't be shorting into the hole at the bottom of an upward channel. Let it fail first. So that's all I want to say, Phil. Any last word from you?
Nope. I think that we got through our month-end flows and our first of the month flows, and that's what we saw in the markets. And, everything was a little risk on now. But I think we have a chance for a bit of a breather next week, potentially the week after as well. And then I think that's where, we start seeing some bullish flows seasonally into that year-end rally. And I think that can carry on through the first part of January too, because as we've talked about, when you get that year-to-date performance, right, and it's positive, that ends up kind of like recollateralizing into the market and actually amplifies things. So even though, yes, you might have deteriorating jobs data, and yes, the inflation stuff that we showed you is cranking back up, those are macro issues that will become more of an issue in the latter part of January, February, and in March. Because remember, seasonally, March is very problematic for these markets. If we're going to get some kind of credit event, or if there's a banking issue, a lot of times it's going to happen either now in this fourth quarter period or then going into March. It's just the way it is. And it's just, it's kind of the cycle of the market. So short term, that's what we're looking for. So I think short term bullish. Macro next year, though, I think that's where it's like, okay, if we're going to get this recession, that's when it's going to happen. And that's where we're going to have a broader pullback and a longer pullback. That's the thing I think is being overlooked here, Bob, is that could actually extend into Q2 of 2025 if it plays out.
Yeah, kind of scary. Maybe tomorrow we'll show them that seasonal chart for the month of December.
Right.
So just kind of, you guys got a feel for it. But the market's been actually behaving very well seasonally here.
Yep.
Kind of wild.
Yep.
And let's not fight it, profit from it.
Right.
So with that, hey guys, hit like, hit subscribe, hit notifications. But in the meantime, you guys have a great day, and we'll see you guys tomorrow.
See you later.
Trade Genius.